When central banks announce a rate cut, it often sends ripples through the real estate market. But for homeowners looking to sell, the big question is, should you list your property before or after the rate cut? In this video, we'll break down how interest rate changes influence buyer behavior, market activity, and ultimately, your selling strategy. Understanding these dynamics can help you make a more informed decision and potentially maximize your returns. Let's start by exploring what a rate cut actually means for the broader economy, and more specifically, for the housing market. Rate cut occurs when a central bank, like the Federal Reserve, lowers its benchmark interest rate. This move is typically aimed at stimulating economic activity by making borrowing cheaper. For buyers, lower rates mean more affordable mortgages, which can increase demand for homes. For sellers, this shift in demand can have a direct impact on how quickly and at what price a property sells. But the timing of your sale in relation to a rate cut can make a significant difference. Let's look at how the market usually reacts right before and after such announcements. Before a rate cut is officially announced, there's often speculation in the market. Buyers may hold off on making offers, anticipating that mortgage rates will soon drop. This can lead to a temporary slowdown in activity, with fewer showings and offers. Sellers might notice their listings sitting a bit longer, and price negotiations can become tougher. However, this period of uncertainty is usually short-lived. Once the rate cut is confirmed, the market tends to react quickly. So, what happens after the announcement? Once a rate cut is announced, buyer activity often picks up rapidly. Lower borrowing costs make homeownership more accessible, drawing more people into the market. This surge in demand can lead to more showings, multiple offers, and sometimes even bidding wars. For sellers, this environment can be highly favorable, as increased competition may drive up sale prices. However, it's important to remember that this window of heightened activity can be brief, as more sellers may also rush to list their homes, increasing competition. As news of a rate cut spreads, more homeowners may decide it's the perfect time to sell. This influx of new listings can quickly shift the market from a seller's advantage to a more balanced or even buyer-friendly environment. With more options available, buyers can afford to be pickier, and the intense competition among sellers can put downward pressure on prices. Timing your sale to avoid this rush can be crucial if you want to stand out and secure the best possible deal. Selling before a rate cut can mean less competition from other sellers, as many homeowners may be waiting for the announcement. Your property could attract buyers who want to lock in a deal before rates change. Additionally, you may have more negotiating power and face fewer competing listings. However, you might miss out on the surge of buyers that typically follows a rate cut. Weighing these pros and cons is essential for crafting your selling strategy. Selling after a rate cut usually means tapping into a larger pool of eager buyers. The increased demand can lead to faster sales and potentially higher offers, especially if your home stands out. However, you'll also face more competition from other sellers who had the same idea. The key is to prepare your property to shine in a crowded market and act quickly to take advantage of the post-cut momentum before the market balances out. Ultimately, the best timing depends on your personal situation and local market conditions. Consider factors like your urgency to sell, the current inventory in your area, and how quickly you can prepare your home for listing. Watching for early signs of buyer activity or shifts in local demand can also help you make a more informed decision. Consulting with a real estate professional can provide valuable insights tailored to your unique circumstances. Timing the market around a rate cut is never an exact science, but understanding the typical patterns can give you an edge. Whether you choose to sell before or after a rate cut, being prepared and staying informed will help you navigate the process with confidence. Remember, every market is different, and your strategy should reflect both your goals and the current economic climate. Thanks for watching, and best of luck with your sale.